It should definitely matter to corporates. I mean, innovation has been driving the economy forward since the beginning of time. And a new entrant usually relies on something new, something innovative to displace or attack existing marketplaces. We are seeing today uniquely innovation take on a pace that we've just never seen before. The acceleration and doubling in price performance that we've seen in computation is now operating off a whole series of other technologies like robotics, artificial intelligence, neuroscience, biotech, etc. And so the pace and change of innovation is now accelerating. It's moving faster than we've ever seen it. One way that I like to frame it is that in the 1500s, we had the Gutenburg moment, and the printing press changed everything. And you could frame it as we're having about 30 of those at the same time today. And this is now going to drive a completely new paradigm in the economy. Well, one of the ways I frame it is if you try and do disruptive innovation in a big company, the immune system of the company will come and attack you. And the reason is, and it's not a bad thing, it's just that all our organizations are built to withstand change and withstand risk, market changes, et cetera, et cetera. We're now seeing that that change is the higher order bit. And so there's a natural resistance when you come into with something new. An organization, a big company is largely like an organism. And every organism has an immune system to kind of protect itself, et cetera, et cetera. So when you come in with something new, the guy in sales goes, well, that's not how I know how to do it. And you'll get a natural resistance to that. And all of our governance bodies and all of our org structures are built for scalability and they're built for efficiency. The last few decades of the economy with globalization, et cetera, has driven all of the systematization of everything. When you come with something new, it requires a change in all of those, and people naturally don't like it. Fundamentally, people don't like change, and we're seeing that's the bigger driver today. This is a huge and maybe one of the most important questions we're facing in the world today, is how does any regulatory framework keep pace with technology accelerating away from us, right? We try and kind of take bad people and put them into prisons and put a high fence so that they can't get out, and now drones are dropping in cell phones and drugs and money over prison walls with impunity. And so fundamentally the pace of change is fundamentally not compatible with our old way of thinking. And we have our regulatory structures with which lag innovation by definition, but that gap is growing very, very fundamentally. And we're seeing the stress in the regulatory structure from the financial world leading to the financial crisis, but we're now seeing every single regulatory framework under stress. By the time the FDA regulates a drug and gives it clearance, the drug is out of date. And so we're seeing we actually need to evolve and figure out what is the future of regulatory frameworks as a general problem. So we've just kind of been studying a new phenomenon that we call exponential organizations. A new breed of companies is being built literally in the last 5 years. It's a very new phenomenon where new organizations are operating at a minimum 10x performance improvement compared to their peers in the same space. So if you're a big car company, it costs about $3 billion to create a new car model from scratch. Local Motors, one of these new fast-growing companies, creates a brand new car model designed from scratch for about $3 million. So that's 1,000 times performance improvement. We've identified now over 100 such organizations operating in this paradigm. And the book that I wrote called Exponential Organizations documents what are the characteristics and attributes of these new structures, but then what do you do about it, and how do you react to it as a large organization? And we're seeing a fundamental change in the economy where all of our businesses in the past were built around getting an asset or a workforce, putting a legal boundary around it, and selling assets to scarcity. These new organizations are keeping a small footprint at the middle and then scaling outside their organizational structures to tap into what I would call abundance. So if you own a car, it sits empty 96% of the time. Uber and car sharing services are tapping into that oversupply with their services. And the confluence of payment systems, reputation systems, GPS, navigation systems, communications allows us now to information enable all of these old assets that are kind of stuck. And we're seeing these new companies take advantage of that and radically disrupt existing businesses. Uber, for example, is now about half of all ground travel business expense in the US. Right? It's an incredible thing to say for a company that's only a few years old. So for anybody in corporate treasury, there's a couple of major issues. One is the huge regulatory structural issue that we're facing, and how do we navigate that. A second would be disruptive technologies like Bitcoin coming along that are making how we think about the world completely change. Our money systems are centralized monetary systems, and Bitcoin decentralizes all of that. And so dealing with that kind of change in modality is going to be fundamentally important. We used to value the world via money. Increasingly, as we move forward, we're changing the modality of that, and we're valuing information more. Today, they're fungible. You can turn money into information and vice versa. But over the next few years and over the next couple of decades, information actually becomes money and becomes the harder bit. So we're going to see a very fundamental change. We think treasurers start becoming data treasurers, in a sense, and we'll have to operate with that mentality. They already do to some extent, but that will increase.